Time for Money Wednesday, I guess you could call it. We're breaking down the debt ceiling deadline.
Yeah, David Seeger, President and CEO, and our resident expert. He's the President and CEO of Great Lakes Credit Union. David.
Good morning.
This impacts you, what's going on in Washington, D.C., big time.
It does indeed. Open the markets this morning, though, they're up right now, but they can still see by the graphs, they've been bouncing all over the place. Here's some good news, they go up, and then here's some bad news, they go back down. Actually, we're slipping a little bit. We were up about 62 about an hour ago, now we're down to 54.
This affects your business, but it's going to affect us Americans. What happens in the next 24 hours?
Exactly. Well, now, for example, for example, Fitch, which is a rating company for bonds, and that's how we finance our, as a government, that's how we finance our expenditures.
Is that like Standard & Poor's?
Yes, exactly. It's another one of them, Standard & Poor's and Moody's. They said Fitch has put the United States on a negative watch over the market close, noting that political brinkmanship and reduced financing flexibility could increase the risk of a U.S. default. Political brinksmanship. That's what's the argument going on in Washington right now. And that's sad that is creating the problem for our credit downgrade.
It really is. I was glued to the TV yesterday watching things go back and forth, and we're likely to see the same thing today.
Exactly, and that's why you see these graphs go up and down, because the good news and it goes up, and then bad news it goes back down.
Really big effect on bonds.
Very much so. A matter of fact, let's talk about those bonds. Here's the yield curve right now. This is a graph of all the of the interest rates for bonds that the United States government has. And you can see it, it goes lower and it goes up higher. Now, here's the situation. This is how it affects the consumer, all this business that goes on. If we're downgraded as a government in terms of our bonds and our interest rates that we pay on them, that means interest rates will go up because there's more risk. In finance, we call it a risk premium that will go up. Well, for example, our 10-year bond right down here, that's for the government, that's at 2.72 right now. Now, that's the benchmark bond that we utilize when we figure interest rates for mortgages. So we add some risk premiums and stuff to that 2.72, and that's how we get what the mortgage rates are. If they do fluctuate every day. That's because this number fluctuates every day. And if we're downgraded as a country, and we're downgraded with our bonds in terms of their rating, that means interest rates are going to go higher. So we're going to start from a higher point of a benchmark when we figure rates for mortgages for the consumer, just the fact of the matter that, okay, the U.S. government, they have been downgraded, so they have to pay a risk premium for their bonds that they issue. Same token, we use that number as a basis point for our pricing for our mortgages. So the consumer's going to pay a higher rate.
Right, so it's similar to if we go to buy a car. If we've got good credit, very low risk, we get a better interest rate.
Right.
If you're a bigger risk, higher interest rate.
That's right. And we're becoming a bigger risk in the United States. Consequently, so those rates are going to be higher.
Right.
And then we're going to use that as a benchmark to figure what interest rates are going to be for the consumer. And it's a spiral effect. That's how interest rates are going to be higher for the consumer.
So on a mortgage, it could cost potentially people hundreds of dollars every month.
Yeah. Absolutely. It's not exaggeration.
Just because of the indecision of Washington.
Yes.
We had to wrap up real quick. This happens in the next 24 hours. When will we start seeing this impact?
You see impact starting on Friday with shaky in the markets.
Yeah.
You see some shakiness there, so your 401ks will be affected. And then next week specifically, when some things may be missed, in case there's no resolution in terms of bond payments, it'll be a snowball effect.
Right. Okay. All right. Thanks, David.